Welcome back, everybody. Today we're doing a deep dive into Indian capital goods and power companies.
Oh, interesting.
We'll be looking at a report from Mirae Asset Sharekhan.
Okay.
It's a fascinating look at what's driving their performance
Right.
and what it tells us about India's economic future.
Yeah.
We're going to unpack what makes this sector tick.
Sounds good.
Before we jump into the specifics, though,
Sure.
can you remind us why capital goods are so important?
Oh,
I know they're the foundation of any industrial economy,
exactly.
but for our listeners who maybe aren't as familiar.
Okay. So, capital goods are
Yeah.
essentially the tools and machinery used to produce other goods.
I see.
Everything from factories to power plants to construction equipment.
Right. So their performance is a good indicator of
Yeah,
how those sectors are doing in India.
it really is.
So what's the report saying?
Well, this report covers Q3 of FY 2025,
Okay.
which ended in December 2024.
Uh-huh.
And it's kind of a mixed bag.
Really?
Yeah, overall revenue growth was strong at 22%,
Hmm.
but profitability was a bit softer than expected.
Interesting. So strong top-line growth,
Right.
but not really translating to the bottom line.
Yeah, exactly.
That suggests there might be some factors squeezing profit margins.
That's a good point.
What could be driving that?
Well, one possibility is rising input costs.
Okay.
You know, we've seen some volatility in commodity prices,
Yeah.
and that can have a direct impact on
Sure.
raw materials for these companies.
Right. If the cost of steel or copper goes up,
Exactly.
it's going to eat into their profits unless they can raise prices.
Yeah. And that can be tricky
Very
in a competitive market.
Of course. So it's kind of a balancing act.
Yeah.
Companies have to stay competitive on price,
Right.
but they also need to protect their margins.
It is a delicate balance for sure.
There could also be company-specific issues.
Oh, absolutely.
Some might have had unexpected expenses
Mm-hmm.
or delays.
Yeah, things like that.
So it's not just one explanation.
Right.
There's a combination of
A
things.
lot of factors at play.
But even with all that,
Yeah.
the report highlighted the surge in order inflows.
Oh, it is remarkable.
Can you tell us more about that?
Sure. So in some segments, order inflows are up by 60 to 70%.
That's huge.
It is.
So even if profits are a bit soft right now,
Yeah,
this points to future growth.
it does. It really does.
What's driving this surge?
Well, one factor is the government's focus on infrastructure development.
Right, like roads and railways.
Exactly. Huge investment.
Infrastructure is a big driver of economic growth.
It really is.
It benefits so many industries.
It creates a ripple effect.
Another factor, I think, is the focus on defense modernization.
Oh, absolutely.
India's investing a lot in that.
Huge investments in upgrading military capabilities.
That creates opportunities for certain companies,
Definitely.
like Power Electronics. They had a great quarter.
They did.
53% jump in profits.
53%. It's impressive.
So it's not just government spending driving growth.
Right.
What about the private sector?
Well, we are starting to see some revival in private investment.
Interesting.
For a while, it was mainly government-led.
Yeah.
But now private companies are feeling more confident
That's good.
investing in things like data centers,
Okay.
real estate, wastewater management.
Those are all areas that are
Right.
expected to see growth.
Huge growth potential.
So it's a good sign that
Yeah.
private capital is flowing back in.
It is a very positive sign.
Okay. So to summarize,
Mm-hmm.
profitability is a bit muted,
Right.
but the order book is strong,
Yeah.
like a coiled spring.
I like that analogy.
Now, the report also looks at
Yes.
different types of companies in this sector,
Okay.
project-based versus product-based. Can
Yeah.
you explain the difference?
Sure. So project-based companies are the ones
Yeah.
that undertake those large-scale projects,
Okay.
power plants, railway lines, the marathon runners,
Interesting. And product-based are more like,
sprinters.
yeah, sprinters.
I like that.
What did the report say about their performance?
Well, project-based companies generally
Yeah.
had good revenue growth,
Okay.
driven by strong order execution,
Okay.
benefiting from the government spending we talked about.
Right.
But some companies, like KEC International,
Yeah.
faced challenges with
How about-
delayed payments.
Really?
Yeah, specifically in their water projects.
Can you elaborate on that?
Sure. So it's not uncommon
Okay.
in construction to face delays in payments
I see.
for completed work.
So even if the work is done,
Right.
the revenue isn't recognized until
Exactly.
payments received?
Yeah.
What about the product-based companies?
They generally experienced revenue and profit growth,
Okay.
but their operating profit margins declined.
Interesting. Why is that?
primarily due to the volatile commodity prices.
Oh, right. That makes sense.
It makes it harder to maintain steady margins.
So it's a bit of a mixed bag.
It is.
Project-based companies are doing okay.
Yeah.
But some are facing these delays.
Right.
Product companies are growing, but their profitability
Mm-hmm.
is being affected by those prices.
It's a complex landscape.
It is. Now, let's shift gears a bit
Okay.
and talk about the power sector.
Sure.
It's crucial to any modern economy.
It's the backbone, yeah.
What's the report saying about its performance?
Well, unlike the capital goods sector,
Okay.
which generally had a good quarter, the power sector saw a slowdown.
Interesting. Why is that?
Well, one reason is the overall macro environment.
Okay.
When economic growth slows, it usually leads to lower power demand.
That makes sense.
Businesses use less energy.
Right.
Industrial production declines.
I see.
And even consumers might cut back.
So there's a link between
Absolutely.
economic activity and power demand.
A direct link.
Okay.
And we have seen some softening in India's economic growth recently.
Right, which is likely contributing to this.
So that's the macro picture.
Yeah.
You mentioned some companies like Power Grid and CESC
Yeah,
underperformed.
they did.
What were their specific challenges?
Well, in Power Grid's case,
Yeah.
they're facing slower asset capitalization.
Okay. Can you explain what that means?
Sure. So asset capitalization basically refers to
Okay.
adding the cost of a new asset,
Uh-huh.
like a power plant or transmission line,
Yeah.
to a company's balance sheet,
Got it.
spreading the cost over its useful life.
So when that slows down,
Right.
it could mean they're being more cautious
That's right.
about investments.
Mm-hmm.
What about CESC?
They saw nearly a 6%
Wow.
dip in profits,
Mhm.
partly due to lower power demand,
Okay.
but also some company-specific challenges.
So a combination of factors.
It is, yeah.
Now, it's worth noting
Yeah.
that not all power companies struggled.
Right.
NTPC and Tata Power did well.
They did, yeah.
What were their secrets? Well, NTPC benefited from a diverse portfolio
Okay.
and a focus on efficiency.
Makes sense.
They've been expanding capacity, including into renewable energy.
Smart move.
And Tata Power also saw strong performance,
Yep.
driven by their renewable energy business.
So adapting to the changing landscape
Yeah,
is key to success.
I think so.
Okay, so we've looked at the overall trends. Now I want to dive into
Sure.
individual company performances.
Sounds good.
There were some real standouts,
Definitely.
both good and bad.
Right.
Where should we start?
Let's start with the stars of the show.
Oh,
The
wait.
companies that really exceeded expectations.
Okay, let's hear it.
And at the top of that list,
Yeah.
we have Farad Electronics. As we touched upon earlier, they had a stellar quarter.
Really knocked it out of the park.
They did.
53% surge in profits. That's incredible.
It is, especially their strong order inflow guidance.
Yeah, that suggests this growth could continue.
Right. They're expecting this upward trajectory to continue.
It seems like they're in a great position to capitalize on India's defense sector.
Oh, absolutely.
What are some of the reasons they've been so successful?
They've really been strategic in aligning themselves with the government's focus on modernization.
Okay.
They're manufacturing a lot of advanced electronic systems and equipment,
Like what kinds of things?
radar systems, communication equipment, electronic warfare systems.
Wow, so they're really deeply involved.
They are.
Not just riding the wave, but
Right, they're hoping to create it.
what other companies are standing out in the capital goods sector?
Well, Dixon Technologies is another one.
Okay.
They're in the electronic manufacturing services space,
Uh-huh.
and their revenue growth this quarter was
Yeah.
phenomenal.
How phenomenal are we talking?
117%.
You're kidding? 117%.
It's incredible.
That is mind-blowing.
They're tapping into some powerful trends.
Like what?
The rising demand for electronics, especially in consumer goods and mobile phones.
Right, India's middle class is growing.
Exactly.
Yeah.
And with that comes more demand for smartphones and all those devices.
It seems like Dixon Technologies is in a perfect spot to benefit.
They are.
But are they just riding this wave, or are they actively doing things to capitalize on it?
Oh, they've been very smart about diversifying their offering.
Oh, I see.
Expanding their manufacturing capacity.
So they're not putting all their eggs in one basket.
No, not at all.
That kind of flexibility is key these days.
Absolutely. It allows them to adapt.
What about Amber Enterprises?
Oh, they're another interesting one.
What do they do?
They're also in the EMS space, but focused on air conditioners.
Ah, keeping India cool.
That's right.
And their revenue also jumped, right?
65%.
Not as high as Dixon,
Mm.
but still,
Very impressive.
people aren't cutting back on their ACs, it seems.
It seems not, even with the economic slowdown.
They must be benefiting from that demand.
They are, also from the government's push for energy-efficient appliances.
So they're hitting all the right notes.
Yeah. Strong demand, government support, sustainability.
What about some of the bigger players in the sector?
Okay, so Larsen and Toubro, or L&T.
Oh, yeah, the conglomerate.
They had a solid quarter.
Good to hear.
Their order inflow growth was particularly strong.
Which is a good sign for future revenue.
Exactly.
They're often seen as a bellwether for the Indian economy.
Yes, right.
So their performance matters.
It does, and their strong order book suggests they're well-positioned.
What about Cummins India?
Also delivered a strong performance.
What do they do again?
They're a leading manufacturer of engines and power generation equipment.
Right.
Their growth was driven by demand for their CPCB-IV-compliant gensets.
Now, what is CPCB-IV? Refresh my memory.
Those are the latest emission standards in India.
Oh, right. To reduce air pollution.
Exact.
So Cummins is benefiting from that.
They are. They've invested heavily in engines that meet those standards.
And that's paying off.
It is.
Okay, so we've seen some impressive performances.
Yeah, both from established players and newcomers.
But what about the companies that are struggling?
Well, Ratnamani Metals saw their earnings growth slow down.
They're the ones who make stainless steel tubes and pipes, right?
That's right.
What's causing the slowdown?
Softening demand, particularly from the oil and gas industry.
Right, they supply pipes for pipelines.
Exactly.
And that sector's facing uncertainty.
It is. Increased competition, both domestically and internationally.
So pressure on pricing?
Yeah, and margins.
What about KC International?
Still facing those delayed payments.
Right, especially in those water projects.
That's impacting their cash flow.
Tough situation.
It is.
Any other companies on the watch list?
Honeywell Automation saw their profits decline.
Okay.
They're facing challenges related to the slowdown in industrial activity.
Like in what sectors?
Metals and cement.
Right, if those sectors are slowing down.
They might delay or cancel investments in automation.
Makes sense.
And that impacts Honeywell.
So another example of those macroeconomic trends rippling through.
It is.
What about Carborundum Universal?
They were hit by higher input costs.
The cost of raw materials, energy, all of that.
Yeah, it's squeezing their margins.
Final X Cables also saw a dip in revenue and profits.
Right, facing headwinds from both slowing demand and competition.
So a familiar story.
It seems so.
And we talked about Power Grid and CESC
Mm-hmm.
underperforming due to lower power demand.
And those company-specific issues.
So we've seen a real range of performance here.
We have, from high growth to decline.
But what does it all mean for the future?
That's the big question.
What are the key takeaways from this report for investors?
Well, overall, the outlook for the capital goods sector is still positive.
Really? That's good news.
Yes, long term.
What's supporting that positive outlook?
Remember that strong order book.
Yeah.
That suggests demand will stay healthy.
Right.
And that demand's being driven by the government spending, the defense investments.
Right, and the revival of private sector investment.
Exactly.
So a lot of positive forces at play.
There are.
But what about those product companies?
Yeah, the ones facing headwinds.
What's their outlook?
It really depends on two things.
Okay, tell me.
The upcoming summer season.
Right, because of the consumer durables.
Exactly. If it's a hot summer, demand will surge.
But if it's mild,
Sales might suffer.
and the other factor,
Consumer sentiment.
if people are feeling confident,
They'll spend more.
but if there's uncertainty,
They might hold back.
so it's a bit of a wait and see.
It is.
Okay, but what about risks?
There are always risks.
Of course.
The report highlights a few.
Okay, lay them on me.
Weak export demand is one.
Because of the global slowdown.
Yeah, could mean lower demand for Indian goods from overseas.
Okay, that makes sense.
Another concern is the softness in sectors like metals and cement.
Why are those sectors a concern?
Well, they're major consumers of capital goods.
Oh, I see.
So if they're struggling, it creates a drag on demand.
Like a domino effect.
Exact.
Anything else?
Always the risk of policy changes or regulatory hurdles.
Right, that can throw a wrench in things.
It can.
So even though the outlook's positive,
Mm-hmm.
investors need to be aware of those risks.
They do. Absolutely.
Okay, so we've covered a lot today.
We have.
Mixed bag of results, order inflow boom, company performances.
We even touched on the power sector.
But before we wrap up, I want to bring it back to our listeners.
Sure.
With government spending playing such a key role,
Uh-huh.
how might India's economic policies impact your life
Interesting question.
or your investments in the years to come?
It's a lot to think about.
It is. It really is.
What stood out to you in this report?
For me, it's the resilience of the capital goods sector.
Mm-hmm.
Despite all those challenges we talked about,
The volatile prices, the slowing demand.
the sector's still showing strong fundamentals.
It is impressive.
That really speaks to India's potential.
Yeah, its potential to become a global manufacturing leader.
It's easy to get caught up in those short-term ups and downs.
Right.
But the long-term trends are looking good.
They are.
And I think the private sector participation is really encouraging.
Oh, absolutely.
For a while, it was all about government spending.
Yeah.
But now private companies are stepping up.
Investing more aggressively.
Oh, that's a good sign.
It is.
And the shift towards renewable energy is another positive.
Companies are thinking about the future.
Yeah, a sustainable future.
That's good to see.
Well, folks, we've reached the end of our deep dive.
Time flies.
We've covered a lot of ground.
We have.
Hopefully, you've all gained some insights.
And maybe even some investment ideas.
As always, we encourage you to do your own research. Consider your own goals.
Absolutely.
And talk to a financial advisor.
Good advice.
Big thanks to Mirae Asset Sharecan for the report.
Great report.
And to all of you for listening.
Thanks for joining us.
Happy investing, everyone.